we have a major event happening as of now. If you just woke up, the US Senate passed a bill to end the US government shutdown. Finally, I think everyone is waiting for the US government to reopen. Then, when everything is back in business, they can start trading ideas. Okay, and that's really the fun part of the market, right? But it's still not over yet. We're still in government shutdown because we need to wait a few more steps for the US government to officially open. To end the shutdown, the House needs to pass the Senate bill. Okay, the US Senate already passed the bill. Now the House needs to pass the Senate bill. And then after they pass, President Donald Trump must sign it into law. And then the US government reopens, and this is a very big deal. It means we're going to get data. I told you guys that this week we have big impact news, especially on the US side. CPI data, unemployment claims. Then on November 14th, you have core PPI, retail sales. You can see, based on the schedule, still tentative, right? Because we're still in government shutdown. Not yet officially reopened. Now, let's look at the data. They're giving out readings suggesting that it's going to come lower for CPI month on month. But the core price itself is going to come in a bit higher at 0.3%. Still remain the same for CPI year on year. So still a bit neutral. It suggests maybe they might be anticipating inflation is going to be higher. The Federal Reserve will not really be able to do anything about it. It's still sticky. It's still uncertain for them on the inflation side. They're focusing on the data for the labor market. Okay, you know, you can't keep changing your goals all of a sudden. They're sustaining the idea that inflation is going to be an issue. Therefore, their focus point is the labor market. All right, the unemployment claims, we still don't have any projection for it yet. So this one will be a much more important than CPI. Okay, so if you're going to be on CT, pay attention more to unemployment claims rather than CPI. Okay, because the feds are focusing more on labor market. With all these big tech companies looking to unemploy a lot of people, I mean, there's going to be loads of layoffs. All right, and that's going to naturally encourage the unemployment claims to come in a little bit higher, which the feds need to see that happening. If they see that a lot of these big tech companies are laying off a lot of people, right, unemployment will be high, then that will be justified for the feds to cut rates. Speaking of that, let's actually see what the odds are like right now for the rate cut on December 10th. So still hovering between 63.4%, right? Yesterday I was at 62.5%, even off of the news of the Senate passing the bill to end government shutdown. Still not much movement. They really want to see the official reopening of the US government. Then maybe we'll see a big move. But whichever the case is, the markets are going to be exploding, okay? The question is, will it be exploding up or will it be exploding down? Before we look at crypto, look at stocks first. Off of the news, last night, US market reacted very positively. You can see it's almost a V-shaped recovery since last Thursday. A lot of people last Friday were very, very scared because they thought that the Thursday was a relief rally, but on Friday you closed so much lower. The Nasdaq closed at 24,700-ish, but off of Monday rallied really well. Pre-market open. Now we're trading around 25,666 for Nasdaq. So this is a much more significant rally. If we can sustain here for the rest of the week, base case we just range, then that would be okay, that's acceptable. But if this is still the lower high, then we continue pushing downwards, then that's going to be a problem for stocks, and that will spill over into crypto, which we really do not want to see. This could mean for BTC might be trading below 100K. So brace yourselves and hope we at least range here for the rest of the week. And let's see how the US market will react tonight. Can they continue pushing up, taking out this lower high, continue trading up, then range from there, right? This is a much better view. So really, really exciting for this week. A lot of movements are happening. Now that we covered stocks, we get the idea that they're recovering pretty well, okay? Still haven't completely taken out that lower high, Right? When you need that clean takeout of that lower high for it to push forward. For BTC right now, yesterday, US Open, it did the complete opposite of stocks. Okay, it did retest 104, which if you tuned in into yesterday's live stream, I did say that 104 could potentially be retested maybe in the New York session, right? And in fact, it did. But this morning, Tokyo Open, Asia traders pretty bullish, pushed BTC's price to 107,510. Okay, but as of now, we're seeing another correction, and it's actually pretty high volume on the 4-hour. BTC right now trading at 104,921. What can we expect? We'll break that down. Whatever the outcome is for this week, on the macro side, it's very important we see this week we close above 108,246. 108,246, that way we range here. Okay, I've always spoken about this idea that we need to reclaim here if you want to see better momentum setting up for a new all-time high for BTC. But currently we're still trading below that, but still baby steps. Current weekly candle, we're still trading above, slightly above last week's close, which is at 104. If we can defend this close, then we'll take it. All right, meaning we might be just ranging here for a couple of while, then we push back up to range here. That's what I really want to see. So on the daily, we have ranged below 104 for 1, 2, 3, 4, 5 days until yesterday you get the breakout. Now it's tapping back into this gray box. What is this gray box? This gray box is the open close of the 4-hour candles. Bullish to bearish, bearish to bullish, bullish to bearish, then nuked. New range. Now we're coming back here where we're ranging in this previous key levels. Now it looks like we're sort of rejecting that area. We are actually overextending the range. This is off of last night, the US lows. Okay, we have our swing low, we have our swing high, but you can see US session, holy shit, it was so volatile. It's like, hey, roller coaster. For now, we're still respecting these lows. We're still respecting the open close of this, bearish to bullish. All right, and this kick started off new high, 107. So we're still range bound. So let's see how US will react tonight. Now that you know the news already, you know what to expect. And these are the things that I'm expecting for this week. Unemployment claims, pay attention to that one more, because that's going to be much more relevant to if the Feds will cut rate or not. If it's true that the the big tech companies in the US are actually laying off a lot of people, unemployment will come higher, then I think the odds for a rate cut will be much better in December. So pay attention to that one.